All right. Good morning, everyone. I hope you guys are doing amazing. I hope you did have an amazing week. And I guess it's just 1 week into the festives. Yeah, so it's probably the last best week to for some opportunities, so that you can get in some kitukidogo for Christmas. Definitely the festivities. Um, yeah, and just before I go any further, I would like to pass a risk disclaimer. This is not financial advice, so kindly do your due diligence before you take up any trade decisions as well. But otherwise, you can use this supplement onto your trading activities or onto your analysis to try and get a better outlook or more insights on the pairs you're looking at. Other than that, I would like to remind you guys that the Caribou bonus is still very much ongoing. And if you haven't taken advantage of it, kindly do while time is still on for it or before it expires out, especially this week towards Christmas. To really come in handy. I mean, if you know, you know. So other than that, if you haven't created your FXPesa account, the links are in description, and we still do have our classes ongoing on both online and physical in Uganda and Tanzania. That's FNB House in Tanzania and Rumi Building in Kampala. Other than that, you can always be able to share the stream with your friends, your peers, your communities as well, and then you can get down into it. So, as you might know, we haven't had a few NFPs in the previous weeks, and probably you've been wondering when is the next NFP because we didn't have one in the first Friday of December. Well, we do have an NFP coming out this week, and it will be the October NFP that will be coming out this week on the 16th. So you might want to look out for that coming in this week. Let's see this. Non-farm employment changes for October 1st that will come out, and you see it's coming out on 16th at 2:30 p.m. And as you can see, even that time is a little bit tricky. So you want to be all eyes on deck. We do have a couple of speeches coming out this side, BOE, BOJ, all will be coming out this week. And don't forget, if you want to keep track of all these speeches, know what they mean, how to denote them down, Market Snapshot is the right place for you. Monday to Friday, we'll be breaking down these news events as they come in as well. So tomorrow we shall entirely focus on that NFP coming in. For today, we want to look at what opportunities the market is most likely going to offer us and what may cause a bit of volatility in today's markets. So as you can see today, we do have a CAD CPI coming out at 2:30 p.m. And then we have the median CPI trim, so power trading as CAD pairs. You might want to look out for that. So I'm going to switch to our calendar because it does give us a bit more insights that I want us to look at. So we have the consumer price index coming in for Canada coming in later on in the day. You can see it over here at 4:30 p.m. 4:30 p.m. That's 5 hours from now. I'm seeing the consumer price index released by the Statistics Canada. By Statistics Canada on a monthly basis represents changes in price for Canadian consumers by comparing the cost of a fixed basket of goods. So basically, it's a measure of inflation. We call it the CPI. And USD CAD is one of the world's major economies. For guys that trade pairs like oil on the long run, or trade commodities like oil, CAD is one of the pairs you'd like to watch out for. But in regards to today's news event, the asset with a trade idea, the asset that you want to look out for is going to be USD CAD. And of course, that means we do have a setup on our signal center. As you can see, there is a sell limit that has been given out over here. But I'll be doing that analysis technically from my own perspective. The other pairs you might want to watch out for will be an odd CAD, CAD CHF, CAD JPY, Euro CAD, GBP CAD, and NZD CAD. On this list, my personal favorites are GBP CAD, CAD JPY, and USD CAD. So I'm going to add them to today's watch list so that you can see if you can pick up a bit of opportunities through that in today's market section. So away from that, we don't have any other major news events that may really cause volatility as far as today. Tomorrow we shall of course definitely be handling the non-farm payrolls and the ADP data figures that will be coming out, because that's one of the major news events for this week in the markets. So looking at our trading economics calendar, the highlight we have here is gold near record high. So I think if you guys remember that last week I mentioned that if they go ahead and do the 25 basis point cut, this makes the demand for safe haven currencies or assets like gold, it increases the demand for them. And we did signal probably getting a new all-time high after having seen the Fed go ahead to cut rates that was earlier on last week. So as you can see, gold nears record high. Gold prices climbed 1% to around $4,340 per ounce on Monday, approaching all-time high as investors awaited a series of key US economic release this week for further. They can take further decisions on that. All right, so Tuesday inflation data, Thursday, okay, where were we? Approaching all-time highs as investors awaited a series of key US economic releases this week for further clues on the Federal Reserve's interest trajectory. So of course, you know that next rate cuts will be next year, and Jerome Powell did hint that we may have up to one cut probably next year. The focus will primarily be on the jobs report due Tuesday and inflation data Thursday. Last week, the Fed delivered its third 25 basis rate cut of the year. However, the decision was not unanimous, with three policymakers dissenting and opinions remain divided on the scope of further easing in 2026. Two Fed officials who voted against the cut said on Friday that inflation remains too elevated and that it would have been more prudent to wait for additional data before reducing rates. Gold has surged over 60% year to date. That's from the beginning of the year. We are 60% up from the price where we actually started, and on track for its strongest annual gain since 1979, driven by robust central bank purchases. We know that one of the central banks that has been very essential when it comes to buying gold has been the Bank of China, and we also did see them buy earlier on before the rate decision last Monday. Sorry. For those guys that remember, who guys were on the stream last Monday, we did have an article we read through about Bank of China buying more gold, and I did mention that also that signals in for bulls, right? For a bit of more bullish momentum on these particular pairs. So we can see that has taken effect, and gold is on that big push to the upside, right? All right, so okay, so that aside, I think I'm going to now move on to my MT5, and we can look at some bit of trading opportunities from the technical perspective or from our charts, so that you can see where today's market opportunities actually do lie. In the meantime, do not forget, I would like to remind you guys that we do offer a variety of classes, beginner and intermediate classes, that you can always sign up for with a link in bio in the description, or with the links on our different social media platforms. You will always find there a link in bio that you can actually go ahead and use to sign up for these different classes. And you can always save the link in your notes as well, because whenever we have events, they'll always be updated with that same link as well. All right, so as I just load up my MT5 charts. So one of the things that I think has been moving around a lot is the ideology of December price action, right? Now, December price action is not surely the best, but I wouldn't hold it on as a problem, right? It's only just important that during December price action, you want to be very efficient when you're managing risks, and most definitely just be more careful with the trades you're taking, because the market can easily give you certain changes in price, sudden movements, and sometimes the markets tend to be a bit slow in December, but it doesn't mean there are no opportunities. You may just want to be a bit more careful with the opportunities you're taking, and also with some of the trades, especially against trade pairs like gold. You want to be just very careful with them. They'll be a bit tricky, a bit slow in most cases with December, but I don't really think December price action is something you can always wake up and say probably it's going to, how would I call it? I don't think it's a problem when it comes to trading. Just be something you have to be careful about. You can backtest a couple of Decembers, see how the price has been behaving, lean more into short-term trades. That's my personal perspective. I don't take a lot of long-term trades because I'm predominantly a swing trader. But in December, I take a lot of intraday and a lot of scalping trades, usually because I want to take long in the market when it comes to December, because the price action can be tricky, it can be slow. And when the markets are slow, of course, going to trigger out of emotions. That's always going to be there. So let me just get my dollar index over here. Then we can kick off with the top-down analysis on the dollar index. We see what the week is looking like, right? We start by seeing what the week is looking like, and then we can go down to looking at what the day will most definitely hold. So as you can see from the daily time frame, we did have a bit of a bullish candle that closed bearish. Sorry, I can't scroll this all the way to this other hand. Let me see if I could. So I'll be first choose a 4-hour time frame so I can have a bit of more price action. So you can see we have a supply level up to this area here on the dollar index. We have this supply level. The price is trying to push up into, and I'm expecting today's price action to push us into this area. Then you can definitely want to see if we are going to have a bearish confirmation, probably in a 30 or 30 to 15 minute time frame. You can have a shift to the downside within this window here, push us a little bit lower. And in case price tends to fail to give us a confirmation, so I'm going to just draw what my confirmation pattern will tend to look like by structure. Some of you guys will have your own confirmation pattern, which is also quite okay. So expect something to look something a bit like this. This is what I'll be looking out when price gets to this supply zone. On preferably my 15 and 30 minute time frame, can tend to see some kind of push to the downside like that. Then we can definitely look for some bearish opportunities, especially in the New York session. Provided we do have the Canadian dollar not affecting this so much, but it's a dollar index perspective. We're seeing a bit of bulls coming in. We're 12 minutes into the London session. So this is the London push we are getting. So we expect it to be a bit of trending into this area and preferably giving us that push to the downside in the New York session. But it's just a general perspective coming in from the dollar index. So we'd like to just get this perspective and try to draw it down all the way to dollar-related pairs. This is JPUSD. So just allow me to change the template. So this is our JPUSD. We are going to do top-down analysis on this, coming all the way from the daily time frame. So coming in from the daily time frame, we can see we're having a similar perspective of the dollar on this side trying to go into a bearish retracement, or trying to give us a bit of this push to the downside, meaning that DXY is pushing a bit higher, right? It's inversely correlated. We did see an impulsive push to the upside, but realize that price didn't quite take out any major highs, but we're still coming into this supply zone here, right? So what you want to see before tomorrow's NFP is today's price action pushes a bit lower, right? Because of course the dollar index is looking weak. The dollar is looking weak at the moment, but looking at this daily time frame based on this bearish momentum, we want to see if we have any lower time frame perspective to push us a bit lower, or any reasons why price would go high. I wouldn't expect a very bullish move before tomorrow because of this long week rejection, as you can see. So I'm going to go down to a 4-hour time frame and look at what zones we have here. So the zone we had marked earlier on was this. I'm going to refine it to a 30-minute time frame later on. For now, I'm going to hold it as a general level of this nature here. Of course, there's an imbalance below here. It's going to be a bullish area. But you said if price closes below this area here, we had wanted price to try and correct through this zone last week, but clearly price didn't do that. We started seeing a bullish momentum coming in from there, basically because of the rate cut. That definitely tends to make the dollar a bit unfavorable, or the bond markets a bit unfavorable for investors. So what will they do? When the rates are cut, these guys are thinking of now what companies will benefit, what companies are going to take loans to invest in those industries. So they'll take their money out of bonds and then put the money in equities or equity markets. So I think you saw a correction we're having on US 100 and the S&P 500 early last week, basically because of that particular reason of the rate cuts, right? So when I look at this on a 4-hour time frame, let's look at a level above. So we have this supply level up over here. That price could definitely want to go to and sell, or price can come up here down to this area here, then give us a bullish push. So of course I wouldn't want to favor a lot of bears in this current scenario until I have something backed by, let's say, data. Let's say tomorrow's NFP comes out and it's really very, very good for the dollar. This one I can look at a push up, then a sell to the downside. I want to have a setup that's backed by sentiment or by data at the end of the day. So what I'm going to look at right now is this area to below, down here, because price has two ways it can be bullish. It can come down, pick up liquidity in this zone, and then continue buying to the upside, right? The same alternative, price can get to this zone here. I use this to sell to this area here, and then give me those bulls that I'm anticipating. You get that? These are all perspectives in which price can buy. Then we have scenarios whereby price can generate, because it says long week rejection here. This means that we try to sell towards this zone, but around here we have this Marabuzo candlesticks. We call it an open close level. Price rejected this open close level here. Now that rejection shows that there was a bit of bullish momentum coming in from here. But the only way I'm going to confirm this bullish momentum is if it takes out a structural high. So this is where break and retest comes in play. If this we had enough liquidity within this area, I want it to first confirm by structure by breaking above this and then giving me a retracement and then a push to the upside. That's the other third perspective in which price can be bullish. Remember, you don't need to predict price. These are the possibilities of which price can do. Now, all these possibilities should be backed by something like a confirmation, right? A confirmation that can take on lower time frames. And that's why these structures are going to be given on a 4-hour time frame. It's an overview of what price can do and which ways price can achieve those objectives there. Now, which one do I feel like is more likely? When I go back to my US dollar index over here, if this US dollar index happens to push me to the upside into this area to sell, then I can expect GBP/USD to do the opposite, push me down and then go to the upside. If at all the dollar index just goes all the way from this area here, we have been in a bit of a consolidation here, where price currently is. We have a strong support level there. But in case price happens to break below this support level here, then give us this push below, then I would expect GBP/USD to come and give me a breakout, a retest to the upside. That will be the kind of correlation I'll definitely be looking out for in this case scenario. Shout out to Semakal Rogers. How is that going? Semakal Rogers is actually a medic. He's a medic here in Kampala. Emma Trades. Oh, why do you have the same brand name? Easy to understand. I'm going to copyright the brand name, but shout out to you and shout out to Odiwa Opara. Yeah, thanks for tuning in, you guys. So here's the perspectives I'd want to look out for on, of course, GBP/USD. Then I'll do a bit of refinement on the level below because the zone looks a bit so bulky. So you can tend to break it down a little bit in this case scenario. When I come into this, I'm looking basically for fresh demand levels. If I look carefully, I just have one fresh demand level inside that whole zone. So this zone, I tend to refer this zone as an area of liquidity. The way I marked it out, so I'm going to refer this all the way to this area here because this is my freshest demand level. This had been consumed by price coming and working into it as well. So these are the perspective I'll have. Price could push into this and give me a bearish confirmation, preferably a 30 or a 15-minute shift to the downside. Some guys I think love to call it a smart money reversal. A smart money reversal. To some guys to look like a head and shoulder pattern. To other guys to look like a quasi-model. So it depends on the concept you're trading, but all those three are the same, pretty much the same or similar structure that price could give you. So we saw price rejecting first this level here, trying to push to the upside, and it has found some kind of strong resistance here that probably price may want to take out to get into this zone where we can look for either bearish confirmations or look for a breakout and a push to the upside in terms of GBP/USD. So we're going to be watching it out from this level. So this is the zone. I'm going to just refine this to the upside like this to signal that if price breaks out of this, we'll expect a push back down or a retracement. Of course, you wait for a confirmation, very, very crucial. Then price can push to the upside. By the way, guys, the beauty of a confirmation is that it tends to differentiate you from the idea of trying to be predictive with the market. When you're trying to predict what the market's going to do, you're practically gambling, right? But if you have a zone that's a potential, or let's say reversal zone or a potential reaction zone, and you have a confirmation, you're basically reacting to what the market has done, right? This area looks good, the market has done this when it got there. So you're basically taking your trade based off the signal the market has given you. So you're reacting to the market other than trying to predict the market, which I believe is one of the greatest skills you should ever learn at any given point in time. You learn to react to the market other than to predict the market. So these are not predictions, these are possibilities of how price can move. The most important thing is when price gets to either of these zones, what's it going to do next? What's it going to signal to me? Am I going to get a bullish or bearish confirmation? So we can as well be able to align this a bit with your USD, since they are both correlated with the DXY. indirectly correlated to DXY. So of course, we'll do top-down analysis once again. In this case scenario, is that price on your USD did happen to take out this, and then at the next high, did we sweep it at least? Did we sweep this high at least? Tapped on it barely, right? We tapped on it barely. There's a slight sweep above it and price pushes lower. So when I look at the price action on this high momentum breakout, when I look at the price action here, I still want to have two bullish zones. This is something I'll always do to give myself room, helps me with risk management, and helps me to put all my eggs in one basket. Because I know the market does not, how would I call it? Because I know I can't predict the market, right? But the market can have zones it tends to respect time and time again. Some of the reasons was why we tend to prioritize things like back testing. So I'm having these two areas, there's an imbalance in between this and imbalance in between this. When I go down to my 4-hour time frame, you realize I have a 4-hour demand here, then there's a small 4-hour demand at this area below. So these are my two best possible buying zones. The areas where I want price to come to, then I'll definitely want to factor in a confirmation or look for a confirmation to see if I can get some buying opportunities. So these are the two zones I would like to take up on when price gets to them. Either price pushes me to this and gives me the buying opportunities, or it pushes me to this lower zone, then gives me buying opportunities. When I look at the current momentum, we see that we started off a bit strong with this candle to the upside. Price has been trying to correct. We have a small pullback there. Then now price is currently giving us some kind of indecisive candle. It means that buyers are trying to get into the market. They haven't yet picked up enough liquidity. But then what would I need to know to signal that now we have enough liquidity for price to buy? I'm going to have this intermediate highs, right? This intermediate highs. So of course, if I have this intermediate highs, if price breaks above, then the target would be take out this line, this high over here. Let me get rid of that red line over there. Get back to the 4-hour time frame. So this will be the intermediate resistance price has given me. So for me to be a bit more, or to get signaled a bit more, if a price going to the upside, I'll need price to first violate this resistance area or this high level here. Then I can look for that push to the upside. Beyond that, price has a possibility of coming down into this area and giving me buying opportunities, which I'll want to take strictly upon confirmation, right? Strictly upon confirmation and price gets into this. And once again, you'd want to look for confirmation either on your 30 or 15-minute shift as well. 30-15-minute shifts would give us nice confirmations to push to the upside. I do know people that would prefer to go to the 1 hour and then refine this zone a little bit. It's also something you can always do to pick up a confirmation. So when I come into this, I find that I have no significant demand level, but price gives me this long wick here, right? So usually these are this kind of candle here means that price set liquidity on these two candlesticks before it bought to the upside, which is a good sign. And also sign of a long wick rejection that tends to act as an area of interest for me. So what I would do is that if price gets into this area here, I can also be able to look for a bullish engulfing pattern if price gets to this. It's just that price sometimes will give you a different confirmation from a bullish engulfing pattern. That's why I tend to have a variety, at least like 3 entry modules. I just supplement my concept because I feel like you can't have the market giving you what you want every single time. That's not going to happen, right? So sometimes it's good to backtest a number of entries. Many of us focus on the entry and forget the concept. Once you have the concept of how do I derive my analysis, how do I get my bias, how do I get my potential decision levels, all the areas you want to buy and sell from, then you can have 2-3 kind of like confirmations, because the market will always give you the one you prefer. Sometimes it will give you different ones. And it's always good to be well equipped with the variety. Basically, just that's why I tend to having a bit of options. So if price gets to this zone here, I can as well look for a 1 hour bullish engulfing and then definitely take up some bit of buys. Why I don't fancy engulfing patterns of confirmation so much is because sometimes they won't give me a very big stop loss, because I have to put my stop loss below that whole candle, right? And sometimes they are not the best confirmation patterns. I like leaning towards structure confirmation patterns. So just in case price fails to give me a confirmation within this demand, to most likely violate this area. And when I look below this, I have a couple of imbalances that price would like to come back down to. When I look into this zone that I had marked out earlier, I realize most of the demand levels have been mitigated, and that leaves me with one demand level that I'm going to hold on. I'm going to want to hold on onto this demand level here. as my area of interest. So I want to refine it down to this. So there is this, actually this would work best because price tries to get back into this one here. So I'd have this demand level over here as my different area of interest. So in most cases, if this was a very good range, I would like to look for a sell opportunity below this because of the imbalance I'm seeing here and this high momentum breakout. But then in the event that I don't have enough number of pips, this is Euro USD, so it's a low pip value pair. These are about 30 pips, right? So you're going to be looking for like 15 pips. That's not something I really fancy very much. So I would focus more on looking for buys when price gets to its demand level here, other than looking for the sells. Then of course you can see if right now price can push us to the upside, give us a breakout and push to the ups beyond that area there. Then of course, in case price comes back lower, the range is still not good for me, so I wouldn't really want to look for the selling opportunities. That would be the area you'd want price to break below. Then you look for the sells. But I don't feel like the range in between that it's big enough for me to get us a significant trade, right? So I'll just be focusing more on waiting for a break above this area or price to come back into one of these demand levels. Then I can pick up into one of those. So yeah, basically that's what I would be having in this case scenario. Then now we can come in to gold. We can now look at gold and see what it does have in store for us. So as usual, I'll like do my top-down analysis this way. So as we say that gold is nearing the all-time highs or its previous all-time highs. That's at about, okay, I have a very bad color. The color I chose for this is really so bad. So let me just change that color there. So 4381.60 is our all-time high. And ever since that trade cut, of course, we tend to see that price is now pushing towards that area. And this is something you guys really need to pay attention to, is that sometimes when the market is actually ready to move, it's how simple it's going to form a bit of higher highs and higher lows. Like once it's able to give you a definite direction, the structures on higher time frames will tend to be a bit definite: high, low, high, higher, high, higher, low, higher, high, higher, low, higher, high. It's a bit so definite or a bit almost direct. So here you can see that price is pushing towards this. We have no very close level that are significant that you can look into. But what we do have is we can see the bull. So we're going to drop down to a lower time frame. I'm going to use the 4. Okay, let me just use the 1 hour here. It's a bit too scaled down, but let's use the 1 hour. So look at this structure here. Price came in high momentum, came and gave us a sweep below this, pushed to the upside. And right now what we're basically looking out for is going to be for price to take out these highs. When price to come and take out these highs over here. When prices can start getting the highs already. And it's definitely going to take out those highs and then target the other area above that. So what we want to look out for is going to be one of two things. Since this high is still intact and price is just filling up entirely this imbalance here, the best opportunities will come when price eventually closes above this high. Then we definitely tend to see if we can be able to get a push back into the demand level and then price to continue to the upside. So I would prefer this demand level initially because I think we have news later on in the day, and usually the volatility will tend to be matched. So sometimes I would want to consider this after price closes above it, but for now, price has not yet closed above it. So I'm considering the one below. With gold, anything can change any minute, right? So I want to first consider this. If price eventually closes above this high, then I can pay attention to this. The beauty with always having just a zone is that it gives you room, right? Room to change your perspective or room to pay attention to what the market is doing. When the market makes a demand level here, then it comes back to it and it fails to give me any ample or any kind of sensible confirmation, then you actually have no reason of actually entering that particular market there. Like that's something you have to learn to be comfortable with. It's just something you have to learn to be comfortable with. You learn to react to the market. So I always mark my zones that simply, and then I'm basically just waiting for price to get back into that area over there or that particular level around that. So I'll be having this zone for now because price really closed above it. Then this current zone here is a bearish candle here, a nice one. but the market hasn't closed above it. So if the market hasn't closed above it, it's not yet a valid zone for me, and I'm only going to be waiting for price to validate it. Then I can pay attention to it. After that happens, there's a possibility that price can just sweep and fail to do that. For example, down here, what do you see? So that the market came and attempted to take out these lows here, but what happens? We failed to close below this area. What does that signal? We went into a deep retracement into this supply level here, and I think this is something I've spoken about in for 3 weeks. We saw that on a DXY on the high time frame, on the daily time frame, price failed to take out a certain high. Okay, I can't have it on this side. Let me use sorry, I can't have that past data yet from here. But price failed to take out a daily high before it gave us that big dollar index retracement. So that's something you want to pay attention to. Price will tend to do that. So in case price fails to close above here, you can even have price coming all the way down to fill up this imbalance over here and look for a lower time frame demand level where it will definitely look for more buying opportunities. So that's also a very high possibility. So I'd like to see more. If price gets to this area, I can look for a 5-minute shift pattern. Then I can probably be able to react to that as well in terms of what the market is going to be offering. So I'll be focusing on those moves, especially in the New York session. In the New York session, I'll tend to have good moves on gold compared to London. All right, so that's basically what I'll be looking out for on gold. So I'll just be waiting patiently to see what the market does from that. When I go down to a 15-minute time frame, what structures do we have around here? So where this is an imbalance, that means that will give me, in the time being, my second demand level where I can look for buying opportunities will be this over here. That's in the event that price happens to close below this, and I can target this one over here. But still with gold, these ranges are always good. So this range is a very good range to look for opportunities within. These are about 180 pips. So looking for even a half of those pips is actually very, very okay. Looking at the current price action, is that price giving us momentum to take out this high, then eventually take out this high, and shall wait for it upon retracement, provided it closes above this high as well. That's a fundamental principle based on my own strategy. It's a fundamental principle that I need to see happening before I take up any trading opportunities. And of course, I'll always rely on entirely reactions. One of the greatest art traders historically is called Jesse Livermore. So Jesse Livermore traded from the 18s, and he classified 3 stages of trading. And then there's the second stage and the third stage that are tricky. In the second stage, we focus a lot on predicting the market, right? So in the first stage, where we focus a lot on predicting the market, you focus a lot on being a market predictor. But in the second stage that makes someone profitable, you focus more on patience. So patience is the greatest skill. You wait for market to give you certain structures, certain signals, and then you react to them. That's according to Jesse Livermore. This is in the 18s. We're talking about 1877. I don't know how many of you guys knew that trading was there in 1877, but yeah, that's as far as it stretches back. And we've seen the same principles playing out even on the current Wall Street. And we have guys talking about it even right now in the market. So that's the greatest skill we're going to have in this trading. So until price closes above this area is not valid for buys for me. Until price closes above that, it's something I do, something I'll backtest it, something I would advise you to highly consider when doing your analysis. So moving on further, we had spoken earlier on that we have a card-related news events today. So it's only more than logical that we look a bit into USD card and then card JPY and definitely GBP card. So I think if I do that, I'm able to pair the USD card with a New York session pair, with a Asian session pair, and a London session a pair in that case scenario. So let me start with a USD card. So in case you have any queries, any questions, anything you'd like to find out or get some more information about, kindly drop in the comment section. Then I'll definitely be getting into it towards the end of the session. And don't feel shy to engage in the comment section, right? Don't feel shy to engage in the comment section. So this USD card on a daily time frame. So of course, as all know, when the DXY is bearish, this will definitely go down. So look on the far left here, you realize there's been some kind of strong support level. So on a daily time frame, we have this level. It's been a very strong level, and price is currently almost at this level here. Now, at the time frame that price not yet here, we can definitely want to see on lower time frames what kind of price action is being formed up. Definitely to try and target this area here. So, the 4-hour time frame, we saw a breakout to the downside from here. So, the nice break. Price gave us a pushback into this zone here to fill up this imbalance, and then the market pushed lower, gave us another second break, as you can see. Put another second break. We had a push into this imbalance, or what the ICT guys would love to call the fair value gap, the imbalance, the inefficiency. So that's the zone that price came back into and is pushing lower. It has found a bit of support here currently. We can see a bit of support that the market has currently formed around this. But realize that this imbalance wasn't fully filled, so price can really want to come back and fill that imbalance here in a 4-hour time frame. So we can now drop down to a 30-minute time frame and just see what's happening more on the lower time frames. Remember, the lower time frames tend to give you a bit more data, or tend to give you a bit more insight on the price action. Like one candlestick alone doesn't have to give you exactly what's happening with the price action, but when you go to lower time frames, you get an easier picture of what exactly is going on in a particular currency pair. So right now, as you can see, price has been in this kind of triangular pattern. I don't know how you guys call it, the guys that trade candlestick patterns, but the idea sometimes is that if price breaks above, we look for those bulls. But usually, if price is to break above, I'll need it to break above both the trend line and then our resistance level, which I'm going to just draw, right around here. Let me see this area here. That's the area I'd like price to come back to. So of course, what I'll be looking out for in this case scenario is that will be my resistance. This right down here will be my support level that I can as well be able to refine. I would like to refine it to this level here, what would look like almost a hidden QM level. So in the events that price breaks above, I would like only to break above the trend line and break above that resistance as well. Then from there, I can look for bulls or that push to the upside. When you look around this area, don't have any kind of very close imbalances for price to actually target. But you have one all the way up this side. It kind of looks like a long shot, but yeah, that's what the structure is telling us. Of course, don't forget the fact that price can as well come into fill in this imbalance alone before it goes lower, because we have seen that the DXY has been a bit of a bearish move in the past 2 or so weeks. So in regards that the US dollar picks up, we expect a push to the upside, a retest, and a continuous bullish move from there onwards. Then of course, since it's I don't know what kind of triangle this is called, a right angle triangle. So right angle triangle is over 90 degrees here. In the wake of events that price breaks below this, because usually with this scenario it tends to do that. Realize it's coming lower lows, lower lows, lower lows, lower lows. So also expect price has a possibility of pushing in this area here. Wait for a slight push back up, then definitely target this demand or support level that is right down over there. So that's something you want to watch out for on a USD card. Of course, we expect some volatility on USD card at about 4:30 p.m. And if you remember seeing our signal center, there was a sell limit, I think, on a 4-hour time frame somewhere within this area here. But then this is more of what I'm looking out for in order to react to what the market will be giving me. Those are the zones I'll be watching out for, and hope that when price gets to these levels, it's able to give me a fair amount of confirmations from which I can take my decisions. So of course, from the dollar index, we're going to move in a bit to so from the USD card, we can move in a bit to Europe and see what's going on with GBP card. All right, so now coming to JP card, we can come in from our daily time frame. try to look at the bigger perspective. You realize even GP card is pushing us a bit to that bearish move. And even if you look at the daily time frame on JP card from the left hand side, we actually do have a seeming kind of resistance, support level, sorry, just like we saw in USD card in the daily time frame. And if you look at where they were formed, it would tend to look like it's almost the same bit of price action that was formed a while ago in USD around here, right? We had this on USD card, we had the support level. We're seeing something almost similar on a GBP card, right? So what we want to focus on is having this support level as our drawn liquidity or our target area, right? So it's the area I want to see a price get to. So let's see on lower time frames, what areas do we have that could definitely push us to that particular zone. So straight away, just in case prices to go to the upside first in today's price action, because that's a possibility. Remember, price can have three ways of moving to the downside. Either to just move, break out as the nearest low, retest it and push lower, or to, let me just illustrate this. Either to push, take out the nearest low, give us a slight pushback in our retracement, then go lower, right? Alternatively, it can buy up into either this supply level or the supply level next, then push to the downside. So these are some of the ways in which price can actually go and bearish target this area here. Then we're going to look above this. We have a very nice, beautiful imbalance up this side here, two candles, and both of them have nice imbalances. Then you're going to realize that right below those imbalances, there was this long rejection wick that price happened to respect. This was our rejection wick, and you realize that price actually respected it when it came back into it and pushed lower. That means for me to look for bulls, I'll be looking for bulls only to come and fill up this imbalance here. And I would want those bulls after price closes above this resistance level here. So this resistance level is where I would like price to come, break above and push to the downside. But before price breaks above that, this is a selling area of interest. Before price breaks above it, one of another great quote you can always have from early traders back in the days, I think it was the likes of Larry Williamson, when I was speaking in the days of the 1970s. They always say that the best bullish setup is a failed bearish setup. Not necessarily that you have to lose the first trade, but then the best bullish setup is a failed bearish setup. Sometimes the market is going to use areas that it would have used for a certain trade, and when price violates that zone, to always tend to come back to some of these areas and then give us the new direction, or use them to continue to a new direction. So that's why in some cases you'll hear of things like flip zones, SND flip, SNR flip. This is where they come from, right? The failed setup, a failed bullish setup is a bearish setup. A failed bearish setup is a bullish setup. So that's some of the quotes from those earlier traders when retail trading had just become a thing. When you come into this is the nearest supply level we have. So it's good to focus on the nearest first. It has an imbalance, it has a breakout, which qualifies as a very good area. So you can have either price coming into this zone here. We would like to take a 15 minute confirmation with GBP card. It's one of those amazing pairs you can always use, especially in times like this and you're looking for like a less volatile pair, because let's say, for example, gold is giving you a hard time. These are some of the pairs you can look out for. GBP card, it's mid volatility, it has good weight on it. And of course, some guys are finding it difficult to trade pairs like JP, JPY. So it's one of the pairs you can look out for. GP card, it's an amazing pair as well. So we have this as our first area of interest, and then we have this as our second area of interest. Now, why I tend to do this is because it has a bit of psychological calm, it gives me. You know, psychologists say to be one of the hardest things in trading, but the way you can do it is by making small changes towards your trading, towards your personal life. So one of the things I do with this is that I always know that I am having a how do I call it? A subjective mind. Price could come here and fail to give me a confirmation. If it doesn't do that, I'm not going to rush into the market. I'm not going to chase the market, right? I know that there's another area price could possibly do what? Come to and then pick up more liquidity, because price is looking for liquidity. One of these areas may have more liquidity than the others, right? Then you will find this being an inducement. Now, to avoid all that, I'll wait for price to get into that zone and then probably wait for it to avail for me the confirmation I'm looking for. If it doesn't, it's okay. It's another zone above. So I'm always keeping myself in that subjective mindset. Price could use this area or this area. But at what point do I take the trade? Only when I see this. Let price come back here, well and good. Then I'm going to look for this trigger, for this signal. I won't wait for it to do ABCD, form the structure, then take my trade. So I can tend to always have two zones, and then I'll do the hardest part of it all, or the hardest part for most traders, which will be waiting. So that's something I like doing a lot. Just helps me be in the right place every single time, and helps me also do other things. Because now I'm waiting for price to get to my zones. When it gets there, if I don't see what I want, I'll always be able to let it be, right? So we have that area there. So any break above this zone here will mean we're coming to filling these imbalances all the way to the supply level. So it will be the area we'll be targeting in case of a break above those two levels. But for now, these two levels are going to be nice areas of interest to look for bear moves in terms of JP card. And you realize that analysis kind of does align with what we just saw in USD card, despite being a bit of different pairs with a common factor, which is of course the Canadian dollar. Then last but not least, we can look at card JPY. It's also one of those exotic pairs I like trading. So card JPY, CHF JPY, are some of those exotic pairs that when they tend to move, they'll give you very amazing moves. Moves you may want to miss out on, right? So this is card JPY. This coming from the daily time frame as well. So what do we see on the daily time frame? So once again, as I was mentioning, I want to look at that gold bullish move on our daily time frame. I said some of these pairs, when you look at the high time frame, without complicating out of your trading, you're always going to notice some similar patterns. This is a low, a high. You're going to have a higher low, higher high. You see, it's just that easy on higher time frames. Higher low, higher high, higher low, higher high, right? And right now we are seeing that the market is trying to push us to the downside, probably for a retracement. So I want to look at the most recent structure formation. We had a breakout. We had a bit of internal structure here. Then price gave us an internal breakout as well, pushed to the upside. You realize that this internal breakout does have an imbalance over here at demand level right below it. We have this price action in between. I just want to establish if it's a Sunday candle or. So this was 12th, today is 15th. So it's probably a Friday candle. Okay. All right, so this was 8th December. So this was 8th, so it was actually a bullish candle with a gap to the downside, then push to the upside. Now go to my 4-hour time frame. I want to see if I can have a demand level in between that. So of course we have a demand level, but this one was so clear, this one was already utilized, so it's hard for price to use it again. We have this current one holding price, but I believe this will only push us as far as this area here. That's the area I would want price to break above. Then I look for buys on this particular pair, because we are seeing a bit of strength on the Canadian dollar on all the other pairs. So to kind of build up a bit of how would I call it? What's the best word to use? Consistency within these pairs here. I have a demand level here. Sorry. I have a demand level right below this. This area is the area I would like to see price come to, then give me a buy. But as you can see, we have this supply level. It's a hidden supply level. When you go to a lower time frame, we should be able to do on a 30 or 15-minute time. Okay, that's on a 30-minute time frame. Here it's that easy to see. We have this hidden supply level here, right? So you'd like to see price come into this area, probably violate and continue to the upside, or you could see price come down here and then give me a buy. But once again, as I mentioned, this is my best possible area to buy from. So I would fancy price coming lower into this zone, then giving me those buys to the upside. Sell opportunities, I don't really fancy those from here. But of course, we're going to give us some reaction. If it gets there fast and gives us a bearish confirmation, you can hope for that to push us down into this demand or support level and then push us to the upside. This would be something to look out for on how the market may tend to form this particular structure on card JPY. The other case scenario would be price breaking out of this level here, giving us that push back in, and eventually gives us an impulse to the upside. That would be the best possible case scenario in regards to what I'm seeing, of course. If I'm looking for any bearish opportunities, I'll look for them under or below this level here, because we do have some nice imbalance over here, another imbalance right below this. So I want price to go low and fill in those ones there in case we break below this support or that 4-hour demand level. Confirmation within these zones will most preferably be within the 5-minute time frame, and for some guys a 3-minute time frame. So in the meantime, I think I'm going to look into your questions and then we see how it goes. Waiting for that New York session and look at what the Canadian dollar does have in store for us. So once again, a special shout out to Semakalo Rogers for tuning in. There's someone here called Emma Trade, so I'm trying to figure out who is who, because Loki, that's also my brand out here, but shout out to you. Thanks for liking the analysis. We shall talk about the brand name later on. Odiwa Peter, once again, are you always tuned in? That's quite amazing. Merry Christmas to you and your family members as well in advance. Sutam Kanji 660. Thanks for the fire emojis. Just don't fire extinguish the fire. We need to keep the fire burning. Going into 2026. Fintel Rick, have they changed the dates for NFP? Reports going forward. Have they changed the dates for the NFP reports going forward? We are used to getting it on the first Friday of the month. So just in case you weren't aware, we didn't have NFP reports for about 2 months because there was a 40-day lockdown in the US government. So NFPs had been halted for that period of time. So right now, why we're having changes is because they are trying to recompensate for the missed ones. But once we have all the data reports, or once they come back to, once they have released all the data reports, because I think tomorrow we have we're supposed to have the December, then we have the November and October NFP reports coming out, right? So once we have been able to have all those won't be scheduled on the first Fridays, but once we're done with having all those reports, then we shall come back to the first Friday of the month. The expectation was to have 2 NFP reports this month, but we're yet to see. After tomorrow, we shall get a definitive answer. But if we have 2 NFP reports this month, that will cater for October and then November, right? Then hopefully we can have a December report in the first week of Jan or the second week of Jan. But then from February, I think we shall be back to the first Friday. From February, hopefully we shall be back. So it's just that's why we're having different ones, right? So we're having different NFPs at the moment. Clearly, Don, your thoughts on JPY pairs? Let's use which should be used to analyze JPY. Let's use GPJPY. I'm not going to use a CAD JPY because we have Canadian news. That's why I actually analyze that. So let's use GPJPY and see what you can have on these JPY pairs. Shall I compare this with USD shortly? Oh, it's a nice structure in the daily time frame. We did have a breakout, a pushback into this zone. So it's a nice demand level. So right now, what I'm going to look out for on a GPJPY. So for some reason, I tend to like swinging GPJPY. So I'm going to go down to my 1-hour time frame, do a refinement, and then wait for a shift. So when I do a refinement within these levels here, what zones can we come up with? These zones are, it's a compression area, price consuming itself. So I always have 2 zones I'm going to look out for. I have this first zone down here. It's kind of like a QM level. Then over here, I have this time fully engulfed. Second one also does engulf eventually. So I'm going to refine that second level to the 15-minute time frame to try and see the price action I'm having right around there. That's when I'm going to look for those long-term buys on GPJPY that I'm anticipating for. I want to have this level here. Let me use the box tool here as well. So these are my 2 zones I want to take buys from on GPJPY. These are the 2 areas I want to look for buys from. I'll take a 5-minute, 3-minute shift within these zones here to look for my buys. Let me just get this back to the 1-hour time frame to reduce a bit of that, right? On the other case scenario, if the market doesn't directly come back to this, I can expect a push up into this zone. Give me some bit of bears. I don't think the bears will last so long, but a price may give me some bears around that because of this impulsive move. But my general perspective would be bullish. So the other case scenario I would look out for would be price breaking above that high. This high here, right? Breaking above that high. and then pushing it to the upside. Once again, my confirmation pattern is just that simple. It is a shift pattern. I just focus on correlating time frames, then I'll look for that shift pattern or that smart money reversal, as SMC and IST guys would tend to call the pattern smart money reversal. So these are the 3 zones I'm looking out for. These 2 zones, I'll be looking for 3-minute confirmations in terms of a shift pattern on that 3-minute time frame when price gets to them. This zone here, I'll look for bears if I get a 3-minute shift to the downside. This one I'll look for buys, this one as well, when price gives me a shift to the upside in terms of that. Basically, what I'm looking for in JPY pairs is same perspective. I expect the JPY to gain a bit of strength, probably till tomorrow. Then we can see these pairs probably buy to the upside. JP, JPY, ST, JPY, CAD, JPY. It also tends to align a little bit with CAD, JPY, if I'm not mistaken. We have just seen that in a bit here. You can see this on CAD, JPY. So I think that gives a clear perspective on the JPY pairs are looking like. There's a bit of strength coming on them, but they have been relatively weak because of their central banking policies in regards to interest rates. So you can see a similar perspective coming in from this side here, right? That's for clearly the Dawn, Alan, Taiya, hello, Kaine Brayo Black ne, hello, the name is complicated. Kenton Royal, Kenton Academy. Good morning, Kenton. How is that going that side? Thoughts on ZAO USD. We did look at gold earlier on already. So in the interest of time, we are speaking about the break above this area here. As you can see, price is now taking it out. I would like to see a pushback up on a closure on that. We're looking at the 1-hour time frame. Wanted to see a candlestick closure on this. Then we can look for some buys. Now, when this price closes above in the next 3 minutes, we can look for a pushback and a push to the upside. Only when this closes, then I can now have this as my first demand level to see if I can get some bit of bulls into that area to push me to the upside. Into this area, and to mark the area looks so big, so I'll just refine the 15-minute time frame. I'm just doing this in, let's say, in case the price actually happens to close above it, because it's gold. The next 3 minutes can even can turn even 100 pips, right? So I'm going to have just refine this to something like this. Not the best kind of refinement, but yeah, you bear with me on this case scenario. Yeah, so closure above it's on 1 hour, push back down, push to the upside. So this also be a demand level to look for bulls. So yeah, in case the market comes and violates this, so you will now pay attention to this area here. Of course, confirmations here will be 3-minute confirmations. Since we're in a 15-minute area, or in a 15-minute time frame, we'll look more at 3-minute confirmations. So that's my thoughts on gold. Hopefully this 1 hour closes above this. For the more detailed explanation on why I came up with that, you have to rewatch the video on this in the interest of time. Other than that, I would like to thank you guys for tuning in and being an amazing audience. I would like to wish you guys all the best. Tomorrow morning, once again, we shall be up here to break down the upcoming NFT reports tomorrow, see what the markets will be looking like, and probably see if we can pick up some opportunities through tomorrow, of course, as we usually do every single week, 11 a.m. Do not forget to create your FXPesa account right now and take advantage of that carryable bonus right now, right? Other than that, don't forget what we said on gold. Price is trying to reject the high. Very, very important. So other than that, you guys have an amazing day. We meet again tomorrow. Cheers.